Hi, social equity applicant. It's Craig Levin from 3D Consulting, and this is Module 3, Planning Tools for Small Business Finance and Operations. And this is specific to retail, but you could use it for, you can use these planning tools, obviously, for any type of business that you're in. Um, so what I'm going to tell you about today is three key planning tools that you'll want to have for your finance and operations forecasting, modeling, and narrative. Okay, so the first one is a cash forecast. We talked about this in an earlier webinar. The second is a pro forma income statement going out 3 to 4 years from now. And the third thing is a business plan or business narrative. And that's something that you're going to need when you talk to um, small business lenders or potential partners, and you want to show them what your business is about and how you make money, how your finances work, and so forth. So I'm going to take you through those three things, and I'll bring up a couple of examples on the screen and walk through so that you can see what I'm talking about. Let's talk about the cash forecast first. So let me bring that up on the screen here and share it. Okay, this is a very basic cash forecast model. And there's a couple that we use in 3D consulting. This one is the most simple. And so I wanted to show this to you. And if you'd like me to send it to you via email, let me know. My email is craig at 3dconsultingco.com. All right. So the first thing that we want to talk about in a cash forecast is what's the time horizon? How far out are we looking into the future? So the one that I like best is 1 quarter or 13 weeks. So, it's really a decision about how solid are your projections of cash flow in the future. Every month that you go out or every week that you go out into the future, it gets tougher and tougher to be accurate. So um, this 13-week span is a very popular one because there's a high level of accuracy. And of course, every time that we complete a week, we then go and we add a week at the end here. Okay. So the time horizon, we've talked about 1 quarter. Let's talk about the focus, the time focus of each one of these columns. Notice that it's 1 week every time. Okay, this is April 29th plus 7. And that's how it is throughout. And so whether you're going to look at your cash forecast on a weekly basis, on a monthly basis, or even on a daily basis, really depends on what how tight your finances are. If you have a lot of money in the bank, you don't need to check what your daily cash flow is going to be. But let's say that you have very little cash in the bank. You might have to reconcile every day, and I had to do that to help a company in the past. Mostly we do it by week. Occasionally, when a company has a lot of cash, a lot of available cash, we'll do it by the month, but I like to do it by the week. Okay. Now, where you want to put your cash inflows and outflows in this model is in the week that you're actually going to receive money or you're going to spend money. So you may be spending money for something that is going to uh, last you for a year, let's say for your insurance. Okay. If you have insurance costs that are 3,000 a month, your premium is going to be 36,000 for the year, let's say. And let's just say that you pay it all at once at the beginning of the year. So rather than spread a weekly amount of insurance out here, you're going to do it for the whole year right here. That's when you're going to see your outflow. Okay. Something that I'm showing in every week here is the cost of goods, materials, or in your case, in a cannabis retail store, it's going to be the cost of goods of the cannabis um, inventory that you buy. And so you might have a weekly average, or you might do that on a every other week basis. Okay, but this is a good place where you can put how much money you're going to be spending on inventory. And if you want to get specific, you can always add in lines and list the vendors that you're buying them from. Okay. All right. And one of the most important things here is cash inflows and how you lay those out and stack those up. Notice that I've got it listed by project here. I was doing this with another client who has some projects that pay somewhere between 75,000 and 150,000. Okay. So they're just kind of staggered here as an example. But what you might want to do is in a retail store situation, you might want to have an average, just an average of every week of your POS net sales, let's say. Okay. And you've got something like 50,000 a week. And you know that you have some, I'm going to zap these for right now. Maybe you have some seasonality. Okay. 60,000, where you're expecting some growth. And so you're raising it 10,000 a week going into the second month of this quarter. Okay. And then you know that on July 10th, on oil day, you might have a big day. And so we're going to say 70,000 this week. And we'll say 60,000 these other weeks. So this is really a way to see your net changes in cash each week that you're projecting and what your cash balance is going to look like at any given week in the future. Okay, I'm going to go down here and I've got a credit card that I make a payment on once a month. And I've got my payroll amounts in here. Got some of my other legal and professional services. And I always like to put in some money for emergencies. Okay, in your case, it might be emergency, signage, security, locks, whatever, odd, unforeseen expenses come up every week. Okay, so ultimately, the reason that you want to use your cash forecast like this is so that when you have bills coming in, you can put them in here and plan when you're going to pay them and make sure that you're always a positive number. And if you do see a negative number in the future, you know ahead of time that you're going to hit a cash crunch and you're going to need to do something. Okay. All right. So that is the cash forecast tool number one. The second tool is a Proforma income statement. Okay, let me get to that one here. Okay, this is an example that I used with one of my clients a couple of years ago. And what this is really telling us is projecting into the future. Right here, I've done it 5 years. How much revenue are we going to make by product line or product category? Okay. And then what are our cost of goods sold going to be each year? Our gross profit. So you can see as we go down, this is just like an income statement. All right. Then we go with the compensation and we show what kind of compensation we're going to have in these titles. We're going to have some marketing reps and some sales reps. And this is all a summary, of course. And I'll show you where the assumptions are that are driving this and why you want to use this kind of tool. Okay, here's our G&A expenses: accounting, software, travel, etc. And then lastly, our net operating income. Unfortunately, the client that I was doing this for is not going to reach 6.7 million in sales this year. So this should be adjusted down. And the nice thing about adjusting this down is that you can do it in this worksheet where you've got assumptions. And you can see that there's a monthly sales volume of Delta 8 and distillate, for example. Here's the cost of a kilo of each of these items, and then an assumption as we go forward that the cost would decrease 1% year over year. Then here we've got starting salaries in compensation for these individual titles. So a big part of planning your business is figuring out when to start new employees. And with a pro forma projection like this, we are projecting a start date, a year over year merit increase, and a tax and benefits load. And you can see in the future at this point, which is January of 23, this is starting to kick in. Okay. So you can see that, if I were to move this one out to 1/1/24, notice that it disappears. I'm not going in and hard coding in numbers. This is a articulated model that will do all those calculations for the user. Okay, here is an assumption of headcount in future years for marketing reps, sales reps, telemarketing reps, and the full compensation that would go to those groups of people. And then lastly, you've got, the company was spending an average of $560 a month in accounting. So that is assumed here as well. It's all referencing these cells. And I didn't mention it, but the highlighted blue cells are what I like to use to fill in the model with assumptions. So if I go and I make a bunch of changes to these assumptions, it's going to give me a change in this projection. And here is this projection all expanded. Okay. And so why would you want to use this? Well, if you're changing the scenarios that your business is going to move forward with, such as we're not going to have an increase of 5% year over year in our price for delta 8, or for distillate kilos, let's say, it's going to stay flat. And this THCO is going to, the price is going to drop 5% every year. So as I'm doing this, it's affecting the whole model. And ultimately, if an investor or a creditor like a bank were to ask for a projection, this is what I can give them to show them the trajectory for future years, the assumptions that I'm following, and they might ask for reiterations of this. So imagine not having a model where you would be able to put in an amount and have it flow through the model. Instead, can you imagine just typing it in every time, to hard coding in new numbers? So, one thing might be what will happen if you delay the start of a sales manager, or you don't bring this accountant in-house, or you delay the start of an inventory manager. You can do that. It'll change these amounts and it'll roll through to your to the summary of your model. Now, this is something that I do for my small business clients. I try to learn everything I can about how the business runs so that I can make these assumptions very specific and customized to the business and to the timing of changes in the business. Okay, so that was the second tool. Lastly, the third tool I want to show you is a business plan or narrative. Okay, this is an old customer of mine, and she wanted to apply for a small business administration loan. And they asked for these 7 things, which is pretty par for the course for banks. So an executive summary talking about what the business is about, a business and financial model, which is similar to what I was showing you. Products and services is a list of, what types of products and formats you make. Organization is what positions are filled in the business. The funding request was part of this SBA loan. Proforma P&L is what I was just showing you, and a cash flow forecast, again, what I was just showing you. So you can see the primary importance of those tools. Okay, so this says, as an executive summary, that this company manages direct to customer online sales and fulfillment of premium quality traditional seasonal holiday cakes. Those were fruit cakes. The business and financial model is showing what the unit economics for the average online order are. So the most popular fruitcake that she sold was $50. And look at how small that food cost is, 25%. Okay, so there's a very significant gross profit here. And then she had Amazon fees, shipping fees, as you'd expect. There's a selling, general and administrative, and wages allocation to this based on how many units she sells each year. And the net income came to 21%, or just over $10. And here's an explanation of those unit economics. Here's a history of profit and loss over time, And here's a forecast of future profit and loss at a growth rate of 12 and 11%. This is a explanation of products and services and the key suppliers, and then some more about the opportunity and who is working for the company. So you can imagine doing all of this for your business and preparing a narrative like this so that you can illustrate your competitive advantage. You can show how you will leverage those competitive advantages, and you can customize this to the audience that is going to, like a lender or to a potential partner or investor. Okay, so I will take that off. So those are the three key planning tools for small business finance and operations that if you're using those tools, number one, you'll be very deliberate and planful about how you're spending your money. Number two, you'll understand how your business makes money, what your gross margins are, what the costs of your labor force and your other operating expenses are, and what those are going to be in the future. And lastly, it enables you to show an audience about how wonderful and great your store and team are. So I hope that was helpful. And as I said, please, if you'd like to get a copy of any of these resources, email me at craig@3dconsultingco.com. Thanks so much, and I will see you next week.